Nick, you've got a Loki haircut. You kind of look like oh, sorry.
Do I look cute?
He looks cute. He looks cute. All right. So we're talking Tesla stock today. Of course, we also have good news with FSD rolling out in China, but the stock has fallen significantly. Let's take a quick look here. We've got it now at $292, down by $10 today. It looks like it's in free fall. I mean, if we look at 5 days ago, it was as high as $361. So we can ask Nick Gibbs first what he's thinking of what's going on with this.
Oh man, I'm up first, huh?
Yeah.
I like to sound smart after I've listened to everyone else.
And then say you're wrong. Yeah.
No, yeah, I'm not thinking much right now about the stock. It's not about the stock, it's about the market right now, and also the time of year. Where are we sitting at right now? We're at 292. Okay, so it sold off a little more. But I honestly think a lot of this is just the market. You can just see across the board, risk is off, whether you're looking at Bitcoin, coin, strategy, Palantir, and I mean, NVIDIA is holding up right now, but we'll see what happens after earnings. Just across the board. I mean, wow, I'm looking at Costco. Even Costco just sold off $22. So it's just risk off across the board. I wouldn't attribute this to a Tesla specific thing. I know it's easy to because right now Elon's making a lot of noise, and anytime Elon's doing anything, that's the problem. I think you mentioned that Matt's going to touch on Q1 potential earnings. I don't want to say issues, but softer earnings or delivery stuff. And I definitely think that there's a lot of variables that Matt will probably lay out eloquently. But I think right now you can't dismiss that everything Elon's doing, the narrative of whatever you see, like 100% is turning people off. Whether it makes people just not want to buy Tesla because they think morally or their values would be represented by buying such a thing, and they don't align with those values. Or some people just don't want to have, a anti-Semitic word written on their vehicle, or to be called something, and they want rather avoid that and don't want the attention. I know I have a close friend of mine who bought a Cybertruck, and their wife hates it now because they keep getting flicked off. People are driving by their house yelling things, with their windows open, and they have a little girl, and like, we don't want her to see this. And they're like, and they're hippies. I mean, they're like as hippie as you get. Like, the definition of granola is them, So it's like, this is just so, like, I don't know. But so people might not want to entertain that. But anyways, long story short, in my opinion, this is the market, and everybody always wants to have an answer for why things are happening. And right now there's a very easy answer, and that's Elon and everything he's doing. So that's kind of my thought.
Do you guys agree with that, Matt? I mean, I know you've been banging the drum a little bit, saying that Q1 earnings is going to be very low and that maybe investors aren't expecting this. But to a certain extent, most investors certainly, some will say that this is already built in. They already knew that vehicle sales was going to be low. You're saying it's going to be much lower. But is that impacting the stock price now? I wouldn't expect it, but is that what you're thinking?
Well, so I think so. I'd have to. I'd love to have gone back and looked at how earnings estimates for Q1 have come down, because they were certainly too high, or like 3 weeks ago. So we put out a note to our clients a little over 2 weeks ago. I think when the stock was at 360 or something like that, basically just saying, we wouldn't be surprised if there's a period of softness, because coming out of the earnings call for Q4, I mean, the tone was like jubilant. We're gonna, launch the Robotaxi network in Austin in June, and it was like rah rah rah, and the stock loved it, and it was just shooting off. And I was pretty pumped up too. But then, Bradford and I were kind of looking at the impact of having 4 factories shutting down your most profitable and your highest volume line all at once. And we thought that was just a very significant reduction in production and deliveries for Q1, and then the impact that's going to have on earnings in Q1. Management really didn't do an effective job at, I guess, warning that would happen, and that it would be a short-term, headwind. Now, I think it's not really that big of a deal in the long run, but our concern at the time, and I think this is starting to play out, was that like with Elon being so involved politically and being so polarizing as Nick was just laying out, then you're going to have a reduction in deliveries, and the very easy narrative is going to say, oh, like, look, like Nazi Elon is tanking sales, and sales are down in Europe 40% or whatever they are right now. It's like these headlines were just very easy to foresee, and so we just thought there could be, Tesla can be so streaky and can move so much on significant or on like emotion. And our view was there was a lot of like fuel that could maybe lead to some negative emotion with the stock, and so we're seeing that play out now, unfortunately.
Yeah, I had a video a few days back, about almost a week ago now, about brand damage and addressing whether it's real and to what extent. And it was a controversial video. It lost me some subscribers, but I'm hearing things from some investment folks who are saying that their clients are choosing to sell out of it on principle. I know some owners clubs are struggling with members departing the club because they just can't be associated with it anymore. And unfortunately, we're seeing tonight I have an overnight test drive of the Cybertruck coming up, and I've reached out to a bunch of people I know locally saying, hey man, you want to go for a ride in a Cybertruck? And the majority answer is wouldn't be caught dead in one. It is, the Hummer and the Hummer H2, especially the Hummer H2, had itself a reputation as a jerk mobile, to keep it completely PG. And it feels like that's the reputation the Cybertruck has now, even if the person driving it has, like Matt or like Nick was suggesting, even if they're granola people, it doesn't matter who's driving it. It's the image it presents, and it presents a very strong image, a very certain, unmistakable image. The softness of deliveries is expected. We know that the factories were retooling. We know Berlin did their switchover, and while the introductory rate, they immediately got to a couple hundred production units a day. That's still not the full production rate that we were seeing in previous quarters. So automatically there is going to be some delivery softness no matter what. Will it correct into Q2 and 3? I believe so. But my thought is on the longer term, none of this will matter, because when it comes to things like the Cybercab, it will be cheaper than the competition. That's the only thing that's going to matter. If it is a coin toss, your morals absolutely come into play. Your personal preferences, your choice of the color of the vehicle can come into play. But if something is significantly cheaper, it wins. And I've seen that sentiment before on Reddit when the Model 3 and Y had a substantial price cut a couple years ago. A lot of people said, boy, I do not like that guy or that company, but $5,000 off, ooh, that's a good deal. Hard to beat something like that. So I think that especially with mega packs, there is unlikely to be softness, because businesses just want the best product at the best price, which Tesla has in that space. And when it comes to things like public transportation or a cab network, again, it is a business decision, not an emotional one.
So if we look at the stock price, right, it started to take its rise after the election, November 5th, like that, 250, and it rose all the way to 479, close to 480, December 17th. Then it's fallen down. It's not quite yet at the 250 mark, but it's already at, gone down here. So, is this fall, right? There was this regulation for FSDs now approved. And shockingly, even the announcement that FSD is rolling out in China, and which we'll cover in detail shortly here, that did not stop this fall. So is this the Elon hate, the brand damage? Is this, there's just really nothing to stop it until after the Q1, because we're expecting really low sales and there's no news until June, or maybe there's news when the new vehicles are announced at some point in May. So this is where we're at. Are you guys thinking how is anything going to stop this crash here?
I don't have any idea what makes the market move over the short term, so I will defer to my expert guests on that.
So I mean, I'll take a crack. I don't know that there's a short-term catalyst, until we do have the kind of Q1 report. I mean, and it could even be one of those things that it's a sell the rumor, buy the news sort of thing, where like we've already crashed pretty hard. Who knows? We could dip pretty significantly further, or we could be approaching a bottom. I'm not exactly sure where this is going to kind of level out. But the way that I'm thinking about it is what actually matters to this company and its valuation in the long term is the progress that they're making on autonomy. And that is progressing at a very rapid clip right now. And so that gives me a lot of confidence that, okay, even if we continue to go, I'm almost like ready to kind of pull the trigger at some point in the future. Because I think that narrative is going to really carry the day in the latter half of the year. So I could be wrong on this. This is not investment advice, but my sense is like all this panic that we have right now, whether it lasts another month, another 3 months, my suspicion is when we get to the back half of the year and we're ramping up. Yeah, first of all, the Model Y refresh will have been doing really well, I presume, by then, and that's going to be a pretty significant tailwind. Then you're going to have these new models launching at some point. That'll generate some excitement. But the real important thing, autonomy and how quickly they're progressing on that, they were saying safer than human in Q2. By all accounts, that is still on track to be achieved. And so if that's the case, I think we're in for a pretty exciting second half of the year, would be my sense.
Mm-hmm.
Yeah, and I would just add, I would reframe the way you structured that question, Herbert, because you structure that question around looking at Tesla's chart and saying, here's November 5th, look at where we are now. Is this, Elon or any of this stuff? But zoom out, look at the NASDAQ, look at S&P 500. This is what the market looks like, right? Look at Bitcoin, look at, again, MicroStrategy, coin, whatever. You pick it. This is essentially what the market looks like. Now, Brian and Matt both said it correctly. Like no one knows when these things are going to stop or continue, or like if we all knew that, we probably wouldn't be on here and we would be on some island and I don't know, doing something else. Matt would have 15 more kids. Like who knows? But
he's pumping out those kids regardless of the economy.
I know, dude.
I want to put a kid on each model that Tesla produces.
You're gonna have 7 cars? What are you talking about?
Each seat will have one of his kids in every vehicle,
including the
crap.
RoboVan.
So a 7-seater Model Y. You got that one done. Now you want a 4-seater, a 2-seater.
Oh, don't tell my wife. This will be bad news
20.
for her.
Oh, you look very Canadian today, Matt.
I do, don't I? Yeah.
But to be constructive, if you wanted to pick something or hang your hat on something that could put in a stop to what's happening in the market right now, and this is no guarantee, obviously, but I would say there's a very high likelihood that this market will go the way of what NVIDIA does after markets, especially a company like Tesla. So I think NVIDIA is now the de facto Apple, where Apple used to be the one that saves the market. Right now, it's NVIDIA. NVIDIA is going to either accelerate this decline, or it's going to, what's called hemorrhage the bleeding. So we'll see.
What do you guys think about this concept, which I've been learning, is that it's companies like Tesla, which is a growth company, right? Story stock, looking at the future. They don't do very well at all, specifically Tesla, in a risk-off environment. And so no matter what kind of announcement, like, oh, we've got FSD in China now, nothing. Risk off, doesn't matter. As soon as you're back up to risk on, that's when these kind of stories kick in and play. And that's what you're saying, Nick, right? You're saying that look at the market in general. That's step one. Step two, the narrative has to change with NVIDIA to say, hey, we're back onto a risk-on environment again. The future is looking good. Earnings are going to come, recover again. That's when these stories come in. And so if that's the case, nothing's going to change. No announcement from Tesla will budge the stock back up again until we're back onto risk on. Do you guys agree with that?
Yeah, I would just say, that's kind of what I'm saying. But I think the way Matt and Brian both, again, like they're saying things very well today. Today. Sometimes
Today.
you guys don't. Sometimes you
Yeah.
guys are like me.
Mhm.
But when you look at Tesla at this point, I'm pretty sure Elon has shooken out most of the people who are just in this for an EV stock. Right? I think he's used enough language to say, if you do not want me, then get the hell out of the stock. So I think he's shaking out a lot of people. Obviously, there's still people still in it for it. But so then the question becomes, has anything forget the stock, has anything in the company thwarted your belief that they're making progress towards autonomy and that they're ahead of everyone else? And to me, I would say no. If anything, the exact opposite. This China release and Mexico release and Puerto Rico release, none of us were expecting that. Like, anyone who says they were, liars. No one was expecting that right now, especially after what Elon said on the earnings call. No one expected that. And it's going to take some time for the market to see that. But so if you're invested for autonomy, then life's still good. If anything, life's better than ever. The stock's down, but it is what it is.
So I would say that as bullish as I am on Tesla and autonomy, I definitely did not see it coming yesterday. That was a surprise, a welcome one for sure. Let's look back at the previous all-time high years ago. Stocks trading over 400. If someone had a time machine, and Nick, you brought this up a month or two ago, and they told you, look, in 3 years, 2 years, here's where we're going to be at. We're going to have this many sales, this many products, all this out. And just so you know, I can't tell you what the share value will be on that day, but would you invest more? And the answer is, yeah, I absolutely would have. Oh, by the way, the stock's going down to 105.
Yeah.
Did not see that coming. The market isn't always rational. So do I see anything at Tesla? Forget autonomy. Autonomy, I am confident is on the right path. Do I see anything that's upsetting me about the roadmap? And the answer is no. I mean, the mega pack roadmap looks good. The robot roadmap all of it looks good. The more affordable model, I'm excited for it. The Juniper refresh looks great. All of that is unchanged from where we were a month ago. If anything, it's a little better, and the stock is down. Just like when sometimes you get a great earnings release and the stock will go down, or a bad earnings release and it goes up. I can't predict it. And yes, we did get a comment saying the semis too. Yes, the semis too. All of it, to me, is on the right path. And the surprise announcement of a SNX refresh. That's, I think, going to be another welcome improvement.
Brian, were you saying if you went back to previous all-time highs 4 or 5 years ago and you could look at the metrics today, you'd invest more?
No, I'm saying if you had told me how well Tesla was going to execute, I would have assumed that it would not go to 105, but that it would have continued going up, and it didn't.
Right. I think, Brian, so I say this frequently, but I think this is what you're riffing off of, Brian, that take, like, say jobs report was going to come out tomorrow. Even if you knew that number, what it's going to be, you don't know what to do in the stock market. You don't know which way it's going to go. And so Brian's saying, if I give you all this stuff about the roadmap, everything's gone out, and you think that, oh man, if they do all this, the stock's going to be here, of course I'm going to invest more. You'd be wrong, because you don't know what the market's going to do. We just don't, right? We can invest in companies. We can't necessarily invest in a stock because we can't make sense of what the stock's going to do because there's so many variables that go into it. So you're left with investing in companies versus just in the stock. So that's kind of I think the spirit of that point.
So one of the reasons, they say that Tesla stock is behaving, and it has such for the last since IPO, where it would jump, then it would stay flat or go down for many long periods of years sometimes, and then it'll jump. Right? That's his behavior. And what
5
happens
years,
to it?
let's go.
Yeah, when it's been flat like this for 4 years, now 5 years, right? What happens? People say is that it weeds out any of the weak hands. Number one, people are just there for short term, you bump, and then they don't get it, and then they get tired of it, and they get out. And then, of course, it weeds out the people who hate Tesla. So if you don't like Elon, and he's done things, right? At one point, he made fun of having sex with a horse. Okay, just a few days ago, he talked about Canada being a, not a real country, whatever. He's doing things, the Nazi salute. So those people who are very upset about that, they get out of the car, they get out of the stock. eventually what you have then is a base of people who less of those people into place, and then therefore it can actually then rise more. Do you guys agree with that thinking? And are we there, or are we going to see a lot more sell off because people find like, oh my God, Elon's going to do one more thing next week, and that's the one that's going to get me done. I'm okay with all the things he's already done so far, but that's the one that's going to get me going.
Yeah,
I don't know.
I mean, it's I don't think there is another parallel to this in another stock. I mean, like, sure, you've got other like visionary founders like, Apple under Steve Jobs, but Steve Jobs was never, like talking about effing a horse, the way that Elon was, and let alone getting so involved in the political process. So it's hard to say exactly what's like which cohorts of people are leaving. I mean, we clearly know anecdotally that Ross Gerber was very upset by Elon's politics, and so he, I assume he exited completely, and he's advising his clients to get out also. So there are some people who just can't handle it. We have some clients of ours who've ordered us to sell just because of the politics, nothing at all to do with the company's roadmap. And so, if you've got that situation, like you're going to upset some people. But I think regardless of how polarizing Elon is individually, I think Warren Buffett's words are true that, in the long term, it's a voting machine, and the stock market's a voting machine. And in the short term, the stock market's a voting machine. And in the long term, it's a weighing machine. So regardless of whatever crazy things Elon says, if they launch an autonomous Robotaxi network and the economics are as good as he's saying it's going to be, then it won't really matter too much that he's upset Ross Gerber along the way, because they're going to be generating so much money that people who just want to make money are going to fill that void and bid the stock price up. So, there's going to be some churn. There's certainly some people who would own the stock that are choosing not to because of how active Elon's being politically. That adds to the volatility in the short term. But I think that, if anything, just kind of creates some opportunities for people who are able to kind of take advantage of the emotional highs and lows a bit.
Yeah, I would also say that at least I'm of the belief that money is the true leveler when it comes to politics, or I don't like this person because they said this, whatever. At the end of the day, there are very, very few people that would be willing to pay more money to use a Uber or Lyft than a Robotaxi. And I just think that's the reality of things. People still buy Volkswagens, people still shop at Walmart, people still I don't know, you name the company, right? Like, people still use these things. Like, people don't really care. People still buy Chinese products. Like, people don't care. At the end of the day, if it's more affordable, I want that. I don't really care what you're doing. Just make it more affordable for me so I don't have to spend more money. And that's where I think something like Robotaxi or Optimus become the true peacemaker.
Amazon is an evil company. I mean, I still buy from them 3 times a week, but
All right. Maybe don't say that when I'm on.
well, no, I joke. That's the joke, is that people say that, but they still buy from Amazon. And I don't get the Amazon hate. It makes no sense to me. Amazon pays their warehouse workers more than the rest of the industry pays their warehouse workers. Amazon on your resume will open doors for you that other companies that people might like more won't. The hate is blind. I've seen people say to my, I don't understand how they could think this. If Amazon just charged me $1 extra per item, they could pay everybody more and I'd be happy. No, you wouldn't. You would not pay $1 more. They know, because if they could charge you $1 more, they already would. They know the price you're willing to pay. And Amazon is not making huge money on selling things. The Prime memberships are essentially the entire profit. Just like at Costco, the memberships really are where the money is. So the people who like to say that they hate something enough to boycott it are being idealistic. They're showing a side of themselves. They're showing their Instagram face rather than their real face. And what we're seeing is the truth, that when the prices are so good that you can't deny it, that's where it's at. And you can call Amazon evil or, you know, selfish or whatever. I don't get into that. I just know that the claims that I see are not always backed by reality.
And just on that note, by the way, yeah, I concur with everything you're saying, Brian. Amazon just released Alexa Plus. It's $20 a month. If you are a Prime subscriber, you get access to it by de facto as part of your membership. But it's pretty good. So I would check that out. Omar, I know most of you follow Omar, so if you look at his X page, he reposted one of the videos for it, but it just got launched a few hours ago.
So Alexa's not going the direction of every Google product, which is to release it to tremendous hype and then kind of let it languish for a while and then maybe just cancel it.
Yeah,
I have frustrations with
cool.
Google.
Yeah.
Okay, so let's go back now. We talked to stock. Let's talk about the most important thing for Tesla, and I think all four of us agree that it's FSD, right?
Autonomy.
I mean,
Yes. Okay. Good.
autonomy. A lot of things obviously are very important, and they're all looking good. Model Y sales, Model 3 sales, semi ramp, Cybertruck ramp, new affordable vehicles, energy, Megapack, all these things. But most important, that could really just change the entire story for Tesla is whether or not autonomy works or doesn't. Okay, so this week. Let's talk about that. Whether or not, I think you mentioned it earlier, Matt, that it's looking really on track for you, and you named a few things. So this week, obviously, we had the surprise announcement that Tesla is rolling out FSD in China. There are now 5.1 million Teslas that is available for China. So there was currently in the US, it was 2.6 million. Now you add the 2.5 from China. Now you have 5.1 million cars that's eligible for FSD, number one. Number two, I guess I have to say this because I had so many people on the comments of YouTube saying you are clickbait when you said that FSD is now approved in China. First of all, yes, it is full self-driving. It is FSD version 13.2, the same that we are using in the US. It is just branded as autopilot. And as far as we know, everything that I've seen, all these videos out there, it is, you can use it wherever you can use FSD here in the US as well. And it is been approved in China because you have actual vehicles, customer cars downloading the actual video. Tesla's actually promoting it on their website and app, Tesla FSD in China. And, you can't do that if it's not approved by the Chinese government. And so now I've got like several videos. They're just people in China who have FSD have been live streaming it. They've been playing with it. I'd say that the vast majority of them have been very, very positive, saying how great the car looks like. Sorry, it's not playing here. You can't see it, but I'm having internet access issues. So yeah, that's a big surprise, right? Launched in China, big deal. Anything else that you guys can comment on whether or not we're on track for a June release of a commercialized Robotaxi plan?
I want to jump on the China thing before addressing the June release. First of all, as everyone was saying earlier, that was definitely a big surprise. I was talking about this a little bit yesterday. There was a lot of uncertainty around whether Tesla would actually be allowed to do this. There's been this ongoing issue of China not letting the Chinese video be exported out of the country to be processed at Tesla's data centers. And then at the same time, we know that you can't import the NVIDIA GPUs into mainland China to actually do the training on your data there. So it's always a bit of a catch-22. And what it sounds like Tesla has done is actually super creative, but it's actually training on video of other drivers and then creating simulations based on that, which is actually a pretty different approach than what they're doing. I've got two thoughts on that. One, like super creative and good job to Tesla, but two, it's probably not quite as robust as what we're seeing here with the latest and greatest in the United States. Now, I could be wrong on this. The data we have so far is very anecdotal. It's just like literally just watching videos of this. But I was watching a few yesterday, and I've got a degree in Mandarin, so I can kind of understand a little bit of it, although it's been like 15 years since I've actually used it. So my Mandarin is not as good as it used to be. But I did see one where it was like very clearly a light that turned yellow, and then it was red, and it was actually red before the car got to the start of the intersection, and it turned anyways. And the guy all along was saying like brake, 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 and then it didn't. And so it like I could not imagine the current version of 13.2.8 that my Model X is running would have made that same choice. So I suspect there are some differences in the, I don't know, robustness of the software because of these restrictions that Tesla is dealing with. All that said, I do think it's extremely impressive what they're doing. I think there's going to be some revenue recognition this quarter, and should enable higher sales of FSD going forward, which would certainly be a good thing.
That exact scenario yesterday on 13.2.8, where it was approaching, the light turned yellow. I would have braked, but if someone driving didn't brake, I wouldn't have thought it weird. And the yellow was shorter than I expected. The light was absolutely red when I when I entered the intersection. But I chalked it up to, well, maybe it knows the driving patterns in this area, because ain't no cop in my town stopping you for that.
Also, you have settings. Hurry. You have hurry.
I was
chill.
in standard. I was in standard.
I wonder if in the Chinese version they have those three same options. But
I assume they must.
Yeah.
Yeah. Real quick, Herbert, because I gotta jump to another meeting here. I agree pretty much with everything that's been said. I do think that. How do I say this without getting you a lot of hate comments? I wouldn't be surprised if Tesla is finding loopholes and bending some rules on how they're doing this. They're very clever. They know how to interpret rules, and they obviously don't want to get in trouble. But I'd be interested. I mean, they say that they're just using videos that are public. Well, what does that mean? What do they look like? But if we assume that it is just like YouTube videos that are posted, and whatever China YouTube there is, this I posted about this earlier today, but this creates a virtuous flywheel. It will be self-reinforcing, because more and more people are going to be taking videos and putting it out there and showing, oh no, look, it did this. Essentially imagine, millions of Omar-like obsessed people doing this and uploading things, right? And so that could be the linchpin for all this. But your question was, do we still think we're on track for June? And I think unequivocally. I mean, I had a bunch of interventions yesterday. Are they real interventions? I think so. Not safety interventions, but right now, all over where I live here in downtown St. Pete, we're getting ready for the Firestone Grand Prix. So everything's being set up. There's roads that are closed off, whatever. And honestly, a lot of the roads aren't below.
Oh, you're frozen. Is he frozen to you guys?
Yes, but what a face to freeze on. Boy, when he said he had a hard out, I guess I didn't realize how hard.
Okay. Well, then let me ask you guys this question. So one of the things people are saying is that Elon said that we took simulation data and we now are able to launch it in China. Does that mean that any car company with autonomy can just do the same thing? They don't need millions of miles driven. They don't need the supercomputers. What's your answer for that question?
100% no, absolutely not. If you give me a copy of a program, but don't give me the computer to run it on, it's not going to run. If I don't know how to use the software, even if I can boot it up, I'm not going to get any benefit from whatever it might be, Excel or QuickBook. I mean, obviously not those. I know how to use those, but no, you need all of the pieces to the puzzle, and having one piece, great, that's something. But Tesla isn't taking those videos and simply training from them. It's looking at those videos and saying, what is the difference between this and the billions of miles I already have? Yeah. So it's just a filter on top of it sort of thing. That kind of low level of contributor is my guess. What do you think, Matt?
Yeah, so I would say my view on this did actually change a little bit because I think my belief before yesterday was that Tesla's data from their fleet of vehicles was one of the kind of moats that they had in terms of anybody else wanting to get to the level of autonomy. You'd need the millions of cars with all the cameras and all that data to kind of cherry pick all the scenarios you want, and then you also need the data centers, the GPUs, and the really crack AI staff to figure out how to derive a really great driving algorithm from that data. The fact that they were able to essentially get a pretty decent version of this shipped out without that data moat, that changed my priors a little bit. So I still think you still need those other two pillars, which is the compute and a really good AI team to kind of direct the training and everything. So like GM's not going to do this tomorrow, Ford's not going to do this tomorrow, because they don't have those things. But it did, I think, weaken the defenses a little bit in terms of how quickly others might be able to replicate Tesla's capability. And honestly, I think one of the prime beneficiaries here might be NVIDIA, because they're going to be like, they've got access to a lot of videos. They're trying to come up with essentially an off-the-shelf training ability for their auto OEM customers, and so I could see them being a beneficiary of this.
I'm sure there's a lot of nuance to this, and so we'll need to dive deeper into it, but that's not my understanding, Matt. My understanding is they rolled out version 13.2. 13.2 is what was trained, and exactly the millions of miles get you to that skill. You take that driver and put into a new country, China, with different signs, different rules. That's what they used for simulation, to try to teach it those things. But the example would be, I can drive here in the US. I'm a very good driver here in the US. You plop me into Philippines, you plop me into Thailand, wherever, I can drive there. But I'm going to miss some corners. I'm going to miss something because I didn't quite understand it. It's going to take me some time to understand the signage, the rules. Can I actually turn right here or not? Even if it's a blinking yellow, I need to understand these things. That's what was trained on it. Not, you still needed somebody to give you the 13.2 skill level of a driver.
I'm going to agree with Herbert on that. The difference would be, now take someone who has never driven a car in the US or anywhere, who is from the US, and put them in the Philippines and ask them to drive. They're going to be incredibly lost. The videos that Herbert watched before going got him pretty prepared, but nothing prepared the other driver because they don't know how to drive. I'm not ready to discount any AI player as being definitely not going to succeed, because we're seeing a lot of companies that are able to leapfrog in one category or another. And I don't know which one will be the next one to do it, but it is pretty clear that while if Tesla was able to do this, that means they could do it in any market, because the 13.2 works well enough, and that they could potentially, scale to anywhere. India would be a tricky one, but there aren't many cars there. But India is not that urban. India driving is not that much different than urban China driving. So I think it's scalable in ways that other manufacturers don't have the foundational software yet for right now.
Yeah, and I'm open to being wrong on this. I honestly hope I am. I think we need a little bit more information on exactly how this works.
Yeah, people like James Dama need to weigh in, and their opinions and their understanding of the scenario is miles above us. We don't, right? But that's what they're saying at this point, from my understanding. The other thing is the business model, and clearly FSD now is available in 2.5 million cars in China. 2.5 million cars. So, you might hear people say, don't you know, Huawei's cars can do it? Well, Huawei's only available in the high-end cars. Did you not hear the BYD is going to do it? Yeah, maybe 2 or 3 years. They still need to add the cameras and the LiDARs to every one of their cars. And what they're going to come out with is a small, a limited ADAS at the beginning. All these other car companies that are able to do it, like Baidu and others, they're very similar to Waymo. Why do they only have 2,000 cars? If Baidu, by the way, is the leader, they have more cars than Waymo does. Why do they only have 2,000 cars? If they already solved FSD, they're already out there. So you got 2.5 million cars in China. You got 5 million cars in the US that are FSD capable. As soon as they say, hey, it's legal for you to start making money in this case, you're going to go. So yes, does it matter if everybody's got some version of this? They're not as good, number one. And so the old people will argue and says, oh, haven't you seen Huawei's better? It's not. Huawei's is LiDAR based, number one. And they decided they're going to go neural net in August of last year. So they already knew that they needed to go neural net. And what you're seeing there, it looks great in a defined grid city that they've already mapped out very, very clearly. Of course, it's going to look like great. Just like my joke has been that do you know what the number one company that has the most paid Robotaxi rides today are? It's Disneyland. You go to Disneyland, those cars are paid tickets and they are Robotaxis. They drive you around, right? Some of them have very clear guidance and they go around and around and around in a circle. If you pick a city and you've mapped it out very clearly, you can have great Robotaxi rides. No problem. But that's not the same thing as what FSD is doing, which is any point A to any point B, anywhere from one country to another country to another country. So while Waymo goes, hey, I've added an 8th city to my 7 cities. But by the way, you dive deeper. I've added 5 cars to that city. Okay. Meanwhile, Tesla announces it's now available in Mexico. It's now available in China. Countries, anywhere. Now, anywhere. So what we're seeing with the 2.5 million cars in China is anywhere. Like this one person here talked about, I'm trying to find the article. Yeah, here. She says this, right? Chongqing is a city with the most complex urban traffic in China. This blogger, after using FSD, believes the FSD's capabilities place it in the top tier of Chinese autonomous driving market. They're testing it in many, many cities. So, okay, I mean, you got to dive deeper to really truly understand.
I do want to address that. You asked a rhetorical question. Why isn't Baidu scaling past a few thousand? And I don't know if everyone watching knows the answer. It's because they have human supervisors back at HQ, and you can't scale the humans back at the office the same way you can scale manufacturing. So that is, I assume, the reason why they're unable to scale dramatically. If it actually worked, if it was actually profitable, you would just turn on the faucet and get as many out as you can. And that's the reason. The Huawei one, according to Kyle from Out of Spec, who I had a chance to interview about this, he did a 1-hour recording of a completely intervention-free drive. Is it better? Is it worse? It is too soon to say. Tesla just came out with their autopilot yesterday. Give it a month or 3 to train, and then we'll do a head-to-head and see who's actually better. I think that's where the answer is. But the reality is the market is quasi-infinite for this. There are billions of cars on the road, all of which could stand to be replaced by this. And I will agree with what you said, Herbert, about BYD's free service. It is free, but remember, when something's free, you're not the customer, you're the product. It is free because you are now training their network. And that's great. They need the training. They need the miles in order to get their FSD to work. And once it does, I am confident it will no longer be free, because then it will be the product and you will be the consumer.
Yeah, so there's quite a number of these photos. People haven't seen them, which is teleoperators in China. There's bank full of people out there operating cars. So when you hear about Baidu or Waymo, you got to remember that, you walk into the Waymo, there's nobody there, and you go, my God, it's a Robotaxi. There's a teleoperator that's running the show there. And we don't know how many cars they're playing with at the same time. Is it 1-to-1? Is it 1-to-10? And they're trying to make it 1-to-20, 1-to-100. And that's when they can then roll this out at a reasonable cost. There's a reason why they only have 2,000 cars right now, because they haven't solved that problem of how many teleoperators per car. So that's the reason. That's why they're charging the same amount as Waymo, this Uber and Lyft does. And there's a reason why they're still losing $2 billion a year. So Huawei, for example, had a patent 2 years ago, and they were very proud of it, which is fair, that they were able to get their cars to be instant teleoperated, with a teleoperator from somewhere out there being able to, using 3G technology, being able to have access to control the car at an instant capability. So, and that's a good question, by the way. We are now seeing FSD rolled out. What I just told you, 2.5 million cars in China are being done there. They don't have teleoperators, just like in the US. The driver is the teleoperator right now, right? Supervised. So
Yeah, and like so I'm seeing a lot of stuff in the comments, people saying like, oh, like you wouldn't put your car out there right now, like Tesla's FSD is not there. It's always, you know, later this year, and then it's a year later, and it's the same thing. Like,
well, yeah, that's not true.
I mean, I just think I've been saying this for probably 6 months now. I think the most important metric is how rapid is the rate of improvement of miles per critical intervention as these new dot releases come out. And it seems to me that it's been at least an order of magnitude in the last 2 months, probably. And so do we need probably 2 more orders of magnitude to go to the point where you're safer than a human, and we've got basically 4 months to do it. To hit the timeline that Tesla AI posted about back in October. So in my mind, everything is perfectly tracking to being significantly safer than a human in Q3, which is a huge milestone, because at that point you don't need teleoperators, or maybe you need one per 100 vehicles or something like that, so that if the car gets pulled over or something like that, you can handle it, or some super obscure situation and you just need a teleoperator to handle it. The car doesn't know what to do. A situation like that. But like all the people who make these comments that you were referring to, Herbert, of like, oh, well, look at like Waymo, look how they're rolling out. These people have not looked at the unit economics and modeled it out in detail, because Waymo doesn't scale. These other approaches, even if they are as capable from a technology perspective as Tesla's FSD, which I'd be skeptical of, but let's just say they are, from a business model standpoint, they'll never be nearly as cash flow positive. So Tesla will either at the same price point have much better margins, or at a lower price point will get much more of the market share than these other players. So that's why I'm so bullish on Tesla still, is like I think the unit economics of this, admittedly, it's a new market. It's something that isn't really widespread right now. I do think this, you know, Gary Black likes to talk about the TAM a lot, and like, oh, like look at the TAM for Uber and Lyft. It's not that big. You can't just assume there'll be millions of robotaxis out there. But when you actually look at the pricing and the cost for this on a dollar per mile basis, as I have and as James Alma has in a much deeper way, like this is actually going to be quite revolutionary, and I think it's going to surprise a lot of people.
I'd be curious to hear, Matt, your thoughts on how big the addressable market is once the price, like how much below Uber and Lyft does it have to get before the addressable market begins to expand quite a bit?
Oh, so
I've got the ARK Invest article.
Oh, go ahead.
Go ahead. No, go ahead and answer that, and I'll try to see if I can find it.
Redford found this nugget from it was like an Uber investor presentation maybe 2 or 3 years ago, where they tested out lowering their price by like, I don't know, 10% or 20% or something like that. And it was some insane increase in demand that they got from this test. It was, this is going to be wrong, but it was something like, you know, for a 10% reduction in price per mile, you got like a 50% increase in demand. So the price elasticity on this is extremely high, which kind of surprised me, to be honest with you. But the thing that I always think of is, all right, well, I think it's a bit of an unknown in the zone of like where Uber and Lyft are today on a price, all the way to owning a car and what's your kind of all-in cost per mile, which, you know, the IRS would say something like 63 cents per mile. But where I get comfortable with this is I just model out operating a Robotaxi network at 60 cent per mile price. And then is there enough, you know, margin for the operator to make some money, for Tesla to make some money? And in that case, yeah, you actually have like very good returns for all parties involved. And if that's true, then that's going to absolutely revolutionize personal transport, because it'll be cheaper than all the alternative. It'll be cheaper than like operating your existing ICE vehicle to just take a Robotaxi ride. And so I think if that's possible, it's gonna really change the world. And the TAM's gonna be massive.
And I think what you just said is interesting, that even within a limited test in a limited area for a limited time, Uber was able to see a demand surge. I would not have been able to take advantage of that because I don't look at Uber, because it is typically not remotely cost competitive unless I am looking for a taxi or a ride. I use Uber no matter what it costs, because in my head it is about the same as a taxi but a better experience. So if in my head I just knew it was the cheapest option, and in my head I knew it was getting close to as cheap as owning a car myself, then there wouldn't be any debate, and I agree with you, the market would expand. What'd you find, Herbert?
I found it. Yeah, I just need to find a way to show it on screen. Well, it's going to be right here in a second here. Yeah, it's a complete game changer as soon as you bring down the price. So if you're at $2 or $3, the Uber market is close to, what is it? I'll get there, but $200 million. Where is this? Come on, Matt, you should know this inside out. Where to friggin'.
Yeah, I was looking at the Uber one. I haven't actually looked at the ARC Big Ideas recently. Is that what this is? Yeah, Big Ideas.
Yeah, that's what this is. And I'm just trying to find the actual. I mean, that's got a huge spreadsheet here, so I'll need time.
It's a research project for sure. Yeah, there are. It's. I don't think we need a 100-page report to tell us that the market is going to be big. And there's no, Matt, I don't know if you've seen what I covered on it, but the idea that Waymo is going to be able to buy a $50,000 car or an all-in $100,000 car that costs more to clean, that costs more to maintain, that is only going to last 150,000 miles is insane. If Tesla's planning to keep these products somewhat in-house, as much as they can, own them, in addition to selling them if they sell them at all, which they've said they will, they are then motivated to make them last as long as possible, make them easy to repair, build them in a way that they could essentially keep them on the road forever. If all you need to do is replace the battery every 500,000 miles and the motors every 250,000 miles, what's left? Well, I mean, the suspension, is it cheaper to replace than the whole thing? These could run forever, where a Jaguar I-Pace is not going to run forever. That is set. We know that for a fact. How do you compete when the cost is so insanely high?
So this is their research. Okay. So if you are selling at $2 to $4 per mile at the Western markets, it's a $134 billion market. That is ride-hail companies like Uber and Lyft today. That's the market, $134 billion market. If you start to sell at $1 per mile, they believe that the ridership will increase to now become a $1 trillion business, almost like a 8x to what it is now. 8 times more people will use ride hail if you lower the price $1. If you go to 60 cents per mile, it's now a 2.4 trillion, from 134 billion to 2.4 trillion. And when you get to 25 cents per mile, it's a 5 trillion thing. Because at this point, people will do this instead of buying cars, instead of going take a bus, instead of taking a train. You might just do this regardless. That oh, you know what? I'm going to go to the groceries today and not think twice. Just do it because it's so cheap. So
that makes an intercity drive, like from basically from where I live up to Seattle. That would make it like a $25 ride divided by 2 people, $12 a passenger to go to do a 2-hour drive. That's fantastic. That is ridiculously close to free.
20 miles away to the airport. If I use an Uber, it costs me $75. Uber or Lyft, $75. If it's $1, it'll be $20. If it goes down to 25 cents per mile, it's $5, right?
Why would you own a car if it costs you $5 to take a cybercab to the airport?
Yeah.
There are people who will. There are people, I would continue owning a car because I need to leave my stuff in it. I need to be able to do my road trips, to get out to all these events, meet all these people. But I wouldn't, as a second vehicle, that would be my second vehicle, is no second vehicle. Get it when I need it. Guys, as a reminder, in 5 minutes, I'm going to be doing the after show, the live after show, where I address as many of the questions and comments that came in during the live show, because what is Wednesday to me if I'm not streaming for 90 minutes straight? And I will see all of you guys there. Matt, so great to get you on the show. We've been trying for weeks and I keep giving you insufficient notice. I will work harder to make sure that doesn't happen in the future. And I thank you for being here. And Herbert, fantastic.
I've redirected to you and we'll do that. So Matt, I was going to ask you if you can just give us an update on Q1. So you've done tremendous amount of work. Folks, if you don't know, Matt Smith is part of a billionaire, Halter Ferguson, financial advisory firm. Check them out. So you've done quite a bit of work. What are you expecting for Tesla's Q1?
So real quickly, before I dive into that, Bradford just shot me the stat that I was referring to. So for Uber's pricing experiment, they dropped the price from $2 to $1. And what they found was the increase in demand was 20x. Like
20x.
That's insane.
Yeah. So then, if they knew that, why haven't they done it? You know what I'm saying?
Well,
they haven't done it because they can't afford it. Yeah.
The marginal cost is in between $1 and $2.
Yeah.
So they actually can't do that. But so if you just think of, okay, let's say Uber and Lyft's total, TAM together
180
plus
billion,
taxis. And then you just say, okay, if Tesla prices it at $1, which they would be profitable at, and so would the car owners, then they've got 20x the TAM right there. And so the Gary Black question, I think, is completely addressed. Switching quickly to your other question, and then because we've only got a couple of minutes, I'll just do it at a very high level. So when I was kind of adjusting my numbers based on the Model Y lines being down,
right,
probably losing over 100,000 vehicles. I think I forget exactly where I put it in, but I think the total deliveries I had in my model for Q1 was about 375, something like that. 375,000. And the margin is going to take a hit too. One, because your most profitable line is coming down. Two, because utilization rates are going to be lower. And then in the kind of second half of the quarter, you're going to be ramping up the new model line. There's going to be some inefficiencies. Always when you're kind of at the beginning of that ramping curve, you're not quite as profitable as you were, when you're running full steam. So kind of putting all that together, the lower volumes, the lower production or the lower margin, just because of that. I was coming up with something, I forget the exact figure, but it was around 24 cents of adjusted earnings per share, somewhere in that neighborhood. I think the analysts were more like, 56, 57, somewhere in that neighborhood last I checked. So I had it basically half of where Wall Street was. So like that's, I think those numbers are going to continue to come down from Wall Street as they start doing this math closer to the actual production and deliveries report. And I hope to be wrong on this, and we might get like a very slight boost in terms of revenue recognition from this Tesla FSD China thing. I was doing some quick math on that. I think that's probably going to be less than $100 million of impact. But I think no matter how you slice it, it's going to be a disappointing number from the earnings per share and from a production and delivery report standpoint. But then, as I was saying, after that, there's a lot to look forward to. And it's not because Elon sucks and he's tanking the company that we're going to have an earnings hit. It's because they're doing this Model Y changeover.
Exactly. So I appreciate you actually doing that research and communicating this. It's important that people understand this. Jeff Lutz himself has been talking about it since end of December. Watch out. This is what's going to happen. It did happen. But you're right that today investors may not yet anticipate. They know that it's going to be a bad Q1. I don't think that they realize how bad it could really be. The more we let people be aware of it today, the more it's built in and it's already understood and move on past. We're not a car company. This is an autonomous company. Change the narrative. But, it'll be the transition is happening. Even though how great Tesla has done this, they have 4 factories and they're now producing and delivering. It's today was the first day. Was it yesterday? The first day that China was delivering it to customers already. So,
yeah, the first one I saw was this morning. So I suspect, it was today.
Yeah. Thank you so much, Matt. You did it. Appreciate you joining us. Thanks everybody. See you guys next week. Bye.
Thanks, Herbert.